Wonderful. And today I'm going to turn it over. We're joined by Margaret Boelter, Policy and Business Development Analyst with Zeem Solutions. Margaret's going to share a bit about what Zeem is up to, a developer's perspective on the important role that shared charging infrastructure plays for the commercial vehicle sector. Zeem will also share some of the policy recommendations that they have for states in terms of how they can best partner with the private sector. And so with that, I'm going to share the slides, and Margaret, I'll turn it over to you.
Thank you. Really good to be here today. Thanks everyone for your time and to Jessie and NASEO for this opportunity. My name is Margaret. I'm with Zeem Solutions and focus on policy at Zeem. Can go to the next slide. So Zeem Solutions is a company that designs, builds, and operates charging facilities for commercial fleets. So our focus is on commercial fleets and public fleets to some extent, but focused again on fleets, not on your passenger vehicle that is maybe parked at home, charging at home, or charging in a typical public charging network. We are out there deploying this infrastructure for commercial fleets. And some of our offerings include daily fully charged vehicles, different billing options, and really flexible options for fleets. And our focus really is on uptime and affordability and scalability. So this is a business model and a product that's designed with fleets in mind, and we've tweaked what our offering is to align with what fleets have been asking us for. So you can go to the next slide. So some of our offerings include shared charging depots, co-located charging depots, and in-yard infrastructure. And today, the focus is going to be on shared charging depots. So a shared charging depot just means that this is a site where multiple fleets utilize the same infrastructure, and there's controlled access at the site. So you can move on to the next slide. Actually, back one slide. I'll get to this in a second. But I was going to illustrate kind of what this looked like at our LAX facility, but that'll be a little bit later. But at our LAX facility, we have multiple different fleets operating out of one site. So there's rental vehicles, rideshare, shuttles taking people to and from the airport, box trucks doing last mile delivery. We have drayage vehicles operating out of that site, private and public fleets, some buses, and other types of vehicles. So it's a really diverse site that is managed by our depot coordinators who are on site 24/7. And they are managing those operations, plugging, unplugging the vehicles, and really focused on delivering a good experience to these fleets so that when they electrify, they're confident that it's not going to negatively affect their operations. And I think one of the things to really focus on here with shared charging is this is, again, what public charging looks like for commercial fleets. We've heard from our customers that they want guaranteed access to charging. And so if they're not certain that a charger is going to be busy or inoperable, it's really hard for them to base business decisions on that. And so I think especially in the short term, we're going to see a big need for shared charging hubs, and those hubs kind of focused in and around transportation assets like ports, seaports, airports, warehousing and distribution, and then spider webbing out from there as the market saturation increases and charging speeds increase, and there's more of a need for corridor public charging. But really what I want to emphasize is walking before we run and starting with those use cases that make a lot of sense for electrification, the shorter haul regional areas where we can have really good high utilization at these depots, to give investors confidence on the private side and to make good use of public funding. So to go on to the next slide, I'll talk about one of Zeem's unique products that really gives our customers a huge benefit in electrifying. This is the Zeem charging kit, and it's just a skidded piece of infrastructure What we've done is we've gone out and sourced the most inexpensive and Build America, Buy America compliant components for our make-ready infrastructure, and worked with a manufacturer to just put it on a skid. So it's very simple, and this has been done in the light-duty public side before. But what we're doing is standardizing and simplifying the design so that this can just be dropped in at sites, either at one of our shared charging sites, and this can be scaled up or scaled down based on the size of the interconnect, the size of the depot, and deployed really fast. You don't need to do very much construction. You can do the wiring above ground. And so it helps in sites when there's, environmental concerns. And this infrastructure is stationary and permanent. But if a fleet has a short-term lease on the site, or there's issues with the landlord in doing construction, this can help mitigate some of those concerns because it has a very light touch. And you can go on to the next slide. And this is kind of like a kit solution enhanced with a mobile battery. So Zeem offers shared charging at our hub locations, and that's again our focus. We have our sites in LA, and we're about to open one in Long Beach, California. And this offers a really simple solution for charging for the medium heavy duty sector. So again, like I said, this can be dropped in. And then the way this works with a mobile battery is we can use a mobile battery to charge at our hub site, take off excess capacity, and then bring that charger and dispense it at a customer's site. And so you can use the kit solution, that kind of compartmentalized and skidded make ready and charging infrastructure, drop it in at a Zeem site or do it at a fleet site if the fleet is really adamant about charging at their own site and doing behind the fence infrastructure. So we can really maximize the utilization of our own interconnect and energize sites ahead of grid interconnection with this mobile battery solution. Or if a fleet does have a grid interconnection or gains one down the line, the skidded infrastructure can be plugged into the grid when it's ready to be. And this also helps with technology obsolescence. So you're able to swap out different components, especially the chargers, if the technology is obsolete. And a note on that, we're really seeing a shift and a drive towards megawatt charging. All of our future sites are built for megawatt charging, and a lot of our sites are future-proof. Our existing sites are future-proofed to bring in those chargers in the future. And so I would just, put a big emphasis on shared and medium heavy duty charging, really focusing on that megawatt charging standard now. We had some L2 chargers at our LAX depot that we expected to use for battery balancing and kind of filling out our grid interconnect. But it turns out that those L2 chargers weren't used at all. Even for the light duty vehicles, we just used our fast chargers, and we're able to throttle the power of those fast chargers down if a vehicle needs the power output to be lower. And so again, we're really in this space where we're moving completely towards fast chargers and towards megawatt charging standards. And at that LAX site, we're now going to replace those 18 L2 chargers with one fast charger that has been kind of rated down and modified so that it fits that same kind of total power output of those 18 L2 chargers. And with that, you can go to the next slide that talks about our LAX depot. So we've had really good performance at our LAX depot in California. So these are two adjacent sites that are really close to the LAX airport in Inglewood, California. We did have, two interconnection processes with the utility and went through the Make Ready infrastructure program 2 different times, but these sites are around the corner from each other and essentially act as one site. And we've seen really good utilization here because of that shared charging operation design. We have at least 2 staff on site at all times, 24/7. And again, we're serving multiple different types of vehicles. We have an article coming out soon with ABB that digs into more of these details and has some more data available. So we'll be posting that on our social media if you're interested in looking at more of our charging data. But again, I think this is a really good example of the success and the benefits of shared charging. Really high throughput, really good uptime. So if a fleet is, you know, uh, driving their vehicle and they're worried about having access to charging, a solution that we offer is, you know, you pick up your vehicle at the beginning of your duty cycle, it's charged and ready to go. You don't have to touch any of the chargers. If behind the scenes one of our chargers goes down, we're able to just use a different charger, and the fleet, it has no idea that even happened. And so our uptime to our customers is 100% because we've been able to deliver on you know, a working operable vehicle at the beginning of their duty cycle, which is really what they care most about. Yeah, and so you can go to the next slide here. So our Port of Long Beach depot is opening soon. We're going to have a grand opening event on January 29th, but we are going to be operational ahead of that event. And this is really exciting. It's going to be completely drayage focused, really because of the local fleets there. The photo behind me is of the site a couple weeks ago. So it's at a very good central location, very exciting, has a huge interconnection, and there's also options to expand that interconnection. Zeem Solutions is funded by ArcLight Capital, which is a power generation company. And so they have a lot of properties with really good access to power that are often decommissioned or decommissioning power plants. And so we have a unique access to these sites. And so this is one of those sites. We still have to go through the process of getting a lease and you know, showing the economics and making that work with our investors. But this is a really good template that we're going to copy and paste across the country. And part of this build did include that skidded kit solution that I was talking about earlier, to really simplify the build out. Yeah, and it's going to be serving over 500 Class 8 vehicles daily. And we're very excited about that. So you can go to the next slide. So also on our horizon is our depot in SeaTac, Washington. This site is going to be a mixed site, predominantly with Class 8 vehicles, but also serving the local office spaces with people mover shuttles, we expect, potentially also rideshare. Really, we're opening our sites to any fleet that wants to use them because it's in our best interest to maximize that utilization. And so any fleet is welcome to charge with us. Even if you do show up, you know, on the spot day of, we just need to have a contract in place with you, which can be worked out, you know, in our office that day, if need be, so that we understand what vehicles are coming in and out of the site, and we can understand how to best serve that customer with a customized set of options. Yeah, and so the billing, like I mentioned earlier, and many slides ago, can be done either on a per kilowatt hour basis, on peak, off peak rate, or a flat monthly price that's inclusive of all your charging for the month. And that price is based on how much we expect you to use it. And some of our fleets really like that option because then they have the predictability that they don't even get with diesel fueling, because that price fluctuates a lot. And again, just to really hammer this point home, we do have options for a complete bundle of like the vehicle lease and the charging and service and maintenance and vehicle washes. We even have office space at some of our facilities, like our site on Isis Avenue. We have office space that was used for driver training. And so each site is really designed with the local fleet population in mind, what type of vehicles are around. And so the SeaTac depot is really focused on Class 8 because it's between the ports, but it's going to be able to serve more than just Class 8 drayage trucks. You can go to the next slide. And these are our expansion plans. So we're really looking at sites all across the US. Like I said earlier, focusing on hub networks and then expanding those out across corridors in the long term. Right now, we're not focused at all on corridor public charging sites because the economics are not there right now. there's no guaranteed utilization, and the market saturation is not very high right now on the medium heavy duty side. And charging speed is still not comparable with gas and diesel refueling times. So we're really focused again where the economics make sense on that shared depot charging and behind the fence charging, to serve the fleets that are ready to electrify now first and really focus our energy and resources there. And as time goes on, I think corridor charging will become more predominant. But right now, with limited funding all across the US and limited investor interest, showing that contracted revenue, high utilization, a clear return on investment is really important right now in the short term. So you can go to the next slide. So I promise I'm almost done, and I want to really turn this into a discussion. I'll just do a brief overview here. Actually, I think I'm going to pause and address some of the questions. I haven't checked the chat, and then I can get into some of these policies to support fleet electrification. There's 2 slides on this, but I'm going to pause here and see if we have any questions so far.
Thanks, Margaret. I haven't seen any come through the chat yet, but I did see a couple folks come off mute. Yeah, there's a hand. Matt, go ahead.
Yeah, hi Margaret. I unfortunately jumped in a little bit late, so I missed a little bit of the beginning, but
We're recording, so no
yeah,
worries.
so I'll plan to tune in, but really interesting conversation. And it seems like a lot of progress has been made since some prior conversations. But I guess one question I would have is, considering you mentioned about transitioning predominantly to DCFC and not really level 2, I guess I would follow up that question with, that's from a power level standpoint, but are you thinking about that the same way from a operations standpoint? And I would relate that to, for instance, like multi-hour charging or overnight charging versus like quick turn on route charging, let's say, or however you would label that. But the question is like, are you still going to offer then charging for like longer term and someone comes and picks up the vehicle afterwards, or are you then just going kind of in and out only at those chargers? Because you mentioned that other fleets will come and just pick up the vehicle at the beginning of their route, but if that's the case, then is Zeem moving the vehicles around on a fast charger, or is the vehicle still dwelling at that charger for multiple hours? Right. So kind of like the operations of that.
Yeah, that's a great question. So to answer your question, we do both overnight charging and en route charging. And to clarify, our depot coordinators, so we have operational staff on site. Some of them were pictured in the PowerPoint, that are the ones driving and moving the vehicles around on the site. So those depot coordinators don't drive the vehicles off of the site. Actually, sometimes they're moved from location to location. Like I said, our LAX site is 2 sites that are adjacent to each other. So our depot coordinators are the ones that are plugging and unplugging the vehicles and moving them around. So once one vehicle is done charging, they move it over to a parking space. And that's organized and kind of ordered in a way that's most efficient when drivers come to pick up the vehicles in the morning. And we also offer just on route charging. So sometimes vehicles, like for example, this is really common with our rideshare customers. They'll come in during the middle of the day, go into the driver's lounge and wait for a bit while our depot coordinators charge them. Usually a fast charge for maybe around 30 minutes, and then they're back on their way for the rest of the day. And then for L2 charging, really we just see it as obsolete for our operations. I do think there's a use case for L2 charging with light duty passenger charging, although that's not my expertise, so I don't really want to talk on it. But what I do know is that none of our future sites are going to include any L2 charging. Even overnight charging is done with fast chargers, especially with these bigger vehicles. It's just really the way the industry and the market is going. And again, those fast chargers can be throttled up and down. If you have a 400 kilowatt hour. So, and I see a question came in, and I'll answer the other question about Oregon in a bit, but the DC fast chargers that we have at our Long Beach site here are 400 kilowatt hour. And then, like I said, all of our future sites are going to be megawatt charging. So that's really the focus. And I know there's like the TEPI proceeding in California right now, and a lot of the assumptions have L2 as kind of part of the picture for medium heavy duty fleet charging, which I think is not aligned with the way the industry is moving right now. There's a lot of fast charging technology available, and we're really leaning into that as well as our competitors. So that's kind of what it's going towards. Yeah, and really that's what we're doing is like we are designing our sites with all the chargers being megawatt charging, from what I understand, for future sites. And again, those chargers can be throttled down to, let's say reduce our peak load. And if a vehicle doesn't need to be charged at the full megawatt speed, we can throttle that charger down to, reduce demand spikes and manage our charging a little bit better. And I have a bit on that on the next slide. And then let's see, I think, yeah, so to talk about Oregon, we are definitely interested in Oregon. It's just we have a relatively small team, so we're really focused on executing in Long Beach and Washington and getting those sites built out and done and proving it out, and then copy pasting this model all across the US. But I think Oregon has a really amazing, strong policy market, as well as many freight hubs. So I definitely see it on our radar in the medium term. But right now, SeaTac Washington is up next. And then I would say our site in Newark, New Jersey, Chicago, Illinois, and some sites in New York are also kind of on the short-term horizon for us. Again, but we're like super focused on SeaTac and filling out the depots in LAX and Long Beach just to prove out the model, and then we'll be able to copy paste that all across the US. But we're a team of like around 20-ish people, so it's really just bandwidth limited. There is a lot of interest, and I mean the last round of HVIP in California ran out of funding in a couple of days, and that's that vehicle incentive program. So there's a ton of interest in this technology in the right markets. And then let me see the message from Matt. Yeah, so you're exactly right, Matt. Our depot coordinators, some of them have CDLs, and also the fleets are very understanding that this is kind of the way our operations work. So they're okay with us, moving their vehicles around. And we do have contracts in place with them. And so the fleets have a lot of agency in advocating for, let's say, a certain uptime requirements or other things that they really are looking for. All of our contracts are customized. And so I think the differentiating factor with shared charging broadly beyond Zeem is that there's a contract in place with the fleet, and the fleet has agency to kind of like make sure that there's going to be good uptime and good security at the site if that's what they're looking for. And that's another benefit I didn't even mention about shared charging is the security. There's a lot of places with a lot of vehicles with expensive cargo. They're really concerned about security. And so having that controlled, managed access and CCTV, as well as on-site staff, really gives people a lot more confidence in leaving their vehicles overnight or even just short-term while they're charging. And then we haven't had any fleets push back on moving their vehicles. No. So that's a good consideration. And I think, we're always open to adjusting our operations based on our customers' desires. And really that's why our model has been really iterative to just respond to what those fleets are looking for. And so right now our current sites don't necessarily have pull-through charging, but I do see that as something that we're thinking about for the future. It just does require more space. And so when we're trying to maximize that utilization, that's a consideration. And then, yes, so the chargers are all dynamic. They can be, throttled up and down. And we have an online software system that tracks all of that. And that provider is really helpful with being able to do that. And then the amenities we provide, so it depends on the site. Our LAX site, which again is 2 locations, the Aviation Boulevard location has minimal amenities. There is a building with office space, but that office space is usually used by Rick, our head of operations, as well as Paul, our CEO, sometimes works out of there. And fleets are able to come and visit the site and kind of be hosted at that office space. And then our Inglewood, the other Inglewood site out of ISIS has office space as well, and vending machines, a driver area for them to take a break, bathrooms. We have bathrooms on all of our sites, whether or not there's a office space available. And that office space at the ISIS Avenue site was used by rideshare companies to do driver training, for example. Fleet operators can use that as kind of a base of operations. So if you're a fleet manager and you want to completely eliminate all the overhead related to your facility, you can completely relocate to our site. So you can have an office. We have a maintenance bay at our 626 location with some amount of spare parts for chargers and vehicles. So some maintenance can be done on site. And to dive a little deeper into that, we do preventative maintenance as well. So whenever the vehicle returns from its route for the day, the depot coordinator does a quick inspection, checks that there's no damage to the vehicle, there's no issues with it. If there is anything concerning, they start to do diagnostics, and we have really good relationships with OEMs, both on the vehicle and charger side, to get that fixed as soon as possible. And because we are kind of like, in a way, a volume customer, because collectively our customers buy a lot of vehicles from these OEMs, or we have a lot of chargers from charger manufacturers, we have a close relationship and quickly get a pretty fast, or typically get a fast response from these OEMs to help troubleshoot the issues. And we're able to solve some of those issues on our own. In a lot of cases, we were like the first ones to encounter a problem with a specific vehicle, or the first ones to do a handshake between a specific charger and a specific vehicle. And we work really closely with the OEMs to solve those problems and figure it out and diagnose things. I would say a lot of the more complex things have to go to the manufacturer. And so we're able to get their representatives to come to our site. But we've also had the OEMs come to our site and train our depot coordinators and other staff on some basic maintenance and diagnostics. And then to answer your question about specific times, they are guaranteed specific times. So it's not that they're guaranteed a specific time to charge. We are guaranteeing a certain level of service. So we'll guarantee, you need to run 200 miles on Mondays and you start your duty cycle at 9 a.m. So we'll guarantee that your vehicle is going to have 200 miles of range and be ready at 9 a.m. on Mondays. We don't give fleets specific times to charge, but if they do need a really quick turnaround, we can offer that. And that allows us the flexibility to manage the charging and move vehicles around based on when there's going to be the cheapest power available, when chargers are available, and reducing our peak load. So they are guaranteed a specific time, but it's not in your typical fashion where you would like reserve a time slot to charge. We do it a little differently. But again, I do want to emphasize that we're flexible, and if there's a fleet that really needs a specific service or operational accommodation, we're able to do that. And then see another question about the chicken and egg. So yeah, that's a great question. So I think both things happen concurrently. It's really an operation of finding needle and haystack sites with available capacity. And I'll get into this a little bit too in the policy stuff, but being able to identify whether a site has sufficient capacity quickly with good clarity and high quality information is really helpful for us finding sites. Like I said, we do have this advantage with our investor, but that is not a silver bullet and doesn't solve for everything. We have a a customer lead map in Salesforce with pins all across the country. And that data is collected from open source options as well as our sales team doing outbound calls. We've done millions of phone calls to fleets to understand what their challenges are with electrification, and also understanding what their fleet composition is, what their vehicle replacement cycle is. And that all goes into our database that helps inform where we're picking sites. We also are driven by key accounts wanting us to go to a specific place. And once we get kind of a threshold amount of fleets that are interested, then we're able to go into that market and show that there's demand for our investors. So we have kind of multiple layers of showing customer interest to our investors. That's crucial for getting the site greenlit. And part of that is just showing that there's a concentration of fleets nearby. And then we have fleets that have signed letters of intent or are interested. And then we also have fleet contracts that are in place. And those three kind of layers of customer interest are really important to getting a site greenlit.
Thank you,
And then
Margaret. You're doing a great job
oh
answering
yeah,
these questions. I'm just going to kind of read them so folks watching later know what the question was.
yes, thank you. Good
Yeah, of
point. Good point.
course. So
Yeah.
this next one from Colorado is just confirming. So you mentioned you're guaranteeing this level of service, not necessarily a specific charging slot. What about for fleets who want to show up and do a quick turn, quick charge, like between 8 and 9 a.m., for example? I think you've mentioned earlier you're happy to work with customers based on their needs, so that might be an option for folks.
Yeah, exactly. And for this next question about kind of the amount of mobile batteries we're anticipating, I would say it's up in the air, and I can't really answer this question yet, but it depends on the utilization at the site and the demand for these mobile charging solutions. I would say the demand is really high, but we are going to start small and expand from there with our mobile battery program, so as not to overextend ourselves and really understand the technology. But it is a really exciting solution for a lot of our customers. There's been a lot of interest both for using these mobile chargers to power charging at a customer site, but also just for like off-road charging, I guess, if that makes sense. For example, the movie industry often uses diesel generators, or different work sites use generators. And so this can also solve for that problem. So the demand is really high. I just don't know the exact number of chargers yet, but we will share more information soon, I'm sure. And I also can't answer the mobile battery question about like the size of it, just because I haven't been approved to share that information yet. But I think we're going to be sharing more about that soon. And I believe we'll be at ACT Expo again with more information and releasing more information online too. I'm just going to refrain from answering that since I'm not sure if I can say. But we do have a specific battery and specific battery size in mind. And
Thanks,
then for
Margaret.
managing the peak load, these batteries can also help with that. Like I said, we really optimize for off-peak charging. And so I think this could be a good time to transition to the other slides. So if you want to advance, Jessie. And then let's go to the next slide, actually, because I'm going to talk about some of the favorable rate design pieces and other incentives. But thinking about thoughtful rate design is really helpful. And I do know that demand charges are extremely expensive for utilities and customers alike. And so thinking about a utilization-based phase-in of demand charges is really helpful. In California, in SCE territory, there's a demand charge holiday that is really helpful for getting these sites off the ground and not kind of shutting down the economics up front. We are able to manage our charging, and we optimize for charging off peak because it's cheaper. And so I think that sends a really strong signal to customers like us, customers of the utility like us, to, push our charging off peak and work really closely with the utility to be a good steward of the grid. So right now, the demand charge holiday is really helpful, but we also are shaving that peak load by shifting the charging because, like I said, we have those depot coordinators on site that are managing the charging, and we also have software helping us with that as well. And so based on when the fleet needs to get the vehicle again, say they have a 5-hour window, but the charging that they need is only going to take an hour, we're able to shift that charging to the most optimal hour to reduce the cost of the electricity. And ideally, the rate is designed such that the cheapest electricity is also the best for the grid, if that makes sense. Yeah. So, oh, it looks like the numbering got messed up because this went on multiple slides. But I'm going to move right into these policies to support fleet electrification. These are the last two slides. And just to keep it in order, I'll have you go back one slide, Jessie. And so to reiterate some of the pieces about shared charging, which I think is one of the biggest policy priorities for us, is just education around shared charging and getting folks to understand that there is a public benefit for this type of charging. I've talked a lot about it at length in this presentation, but the really high utilization and uptime drives more emissions reductions and cost savings for fleets, and it makes it more economic for infrastructure providers. And when the economics works better, we're able to deploy more sites because we're proving out the model to our investors and driving that private investment. And it's a really good use of public money when utilization is really high for the public money that's put out. Also, like I was saying, the managed charging can have a really good benefit because it's reducing stress on the grid, reducing that peak load, which is really hard to do at a public charging site when people can show up any time of the day and charge at really fast speeds. So it has a potential to put downward pressure on rates. I know there's some folks like Pact that are looking to do papers on this and more research on this, but the general idea is that with higher utilization of interconnects, the utility is selling more electricity and they're getting a better return on their investment, and that investment being that interconnection with a site. And then vehicle incentives are really crucial. And again, this is an ordered list, I would say. Vehicle incentives are maybe the most important. We see a bottleneck with the upfront price of the vehicles. And this is a huge barrier. I think there's some new OEMs that are coming into the market with Class 8 options that are really compelling, have a really good price point, and have a really good range and payload capacity. And so I think that's going to drive a lot of the reductions in price for these vehicles. But looking at Class 8, these vehicles are 2 to 3 times more expensive than your new diesel vehicle. And when you're thinking about drayage fleets, which is often a target for electrification because they have short routes, they're buying second, third-hand vehicles. And so that price differential is huge. So reducing the upfront cost of the vehicle, either through, competitiveness in the market, and also incentive programs such as the HVIP program, which is the vehicle voucher program in California. There's many other amazing programs across the US that are kind of modeling this. New Jersey ZIP comes to mind. I know that New York State also just opened up their voucher program to not require scrappage. I know Colorado has some really amazing programs with thoughtful design. And again, that cash on the hood kind of upfront reduction in purchase price is really helpful. Also, any kind of reduction in the tax is also helpful because that tax is based on the full price of the vehicle, not the incentivized price. And that's another piece that comes into play with insurance and financing, is that, okay, we've reduced the upfront purchase price, but the insurance and the financing is still based on this really high upfront price of the vehicle. And even though the fleet is not paying that full price, it kind of changes the insurance value. And so I think we're kind of at the cutting edge here of thinking about program design and what might work to solve this problem. And I don't have a one-line answer or solution to this, but this is something that we're working on really closely. Like I said, we're working with a financing partner and helping fleets get connected there. I think there's a lot of creative ideas out there for things like residual value guarantees or pooled insurance programs, and having state agencies or public agencies either lending their credit to help finance these assets, or who knows what might be a way to fix this. And I think, yeah, more to come there, but just wanted to flag that as something that's important to think about. And we're trying to solve that problem as well for our customers. And we do offer, financing solutions for our customers. And again, simple, streamlined program design is really helpful. Anytime we can have consistency across programs, that's really helpful with, explaining this to fleets, and also organizing our applications ourselves. We help customers apply to grants. My colleague Alma, who's amazing, she used to work at the Electrification Coalition. Many of you may know her. She helps walk fleets through the incentive process, and also secures charging infrastructure grants both for our fleet customers and for ourselves. And with those savings, we're able to pass on a cheaper price to our fleets, because ultimately this is still expensive. The TCO is there definitely for some use cases, but it is kind of hard to get to that point without the incentives. And so we are motivated to lower the price as much as possible and maximize our utilization. And so those cost savings from incentives are passed on to fleets. But yeah, in the case of HVIP, just to put a finer point on this, the fleets are the applicants, and we're just kind of providing technical assistance. You can go to the next slide. So the low carbon fuel standards are also really important. In Washington State, for example, it's called the Clean Fuel Standard. And these are really cool programs because they're technology neutral and market-based. So for states that maybe don't have a lot of extra money in the budget, which is pretty typical right now, and funding is really constrained, and we want to be really thoughtful about other cost pressures and affordability. The low carbon fuel standard can be a really elegant solution. And not only does it provide credits from dispensing fuel, I like to think of it as like a carbon price on transportation fuel. I think that's a easy way to understand it. It's definitely more complex than that, and maybe that's not the right terminology to use to describe it. But cleaner fuels earn credits like electricity, and dirtier fuels earn deficits. And then folks that are generating credits are able to sell them to folks that are generating deficits, and that helps incentivize the build out of charging infrastructure, for example, but not just charging. It's really technology neutral and focused on lowering carbon intensity of transportation fuels. Again, it's market-based, so it doesn't require any external money from state budgets. And it also, at least in California, has the option to, or has the potential to, support medium heavy duty electrification through 3 ways. There's the typical operational credits that I just described. There's also the fast charging infrastructure program, which is also called capacity crediting sometimes. And what that is you earn credits based on the capacity at your site. So you earn credits based on how many chargers you have available and the charging speed that you have available, and you earn LCFS credits based on that capacity. And as your operational credits go up, as your utilization goes up, you earn fewer capacity credits and you earn more operational credits. So for us, that means that we have guaranteed revenue on day one. And that really encourages the build out of these sites, because we hear the chicken or egg problem all the time. Like, fleets don't want to buy trucks until there's infrastructure available, and we don't want to build infrastructure until trucks are coming to the site. And so this cracks that chicken or egg problem, at least in part. And that is active in California's LCFS program as well as in Washington's LCFS program. It might be in other areas too. I'm just a little bit less familiar with the other regions. And then the Clean Fuel Reward program in California's LCFS is really new and is still under development, but what this is a pot of funding that comes from utility holdback funds. And the way I understand that, it's the residential charging credits that are not claimed by anybody else. And so those credits go to utilities, at least in California, at least with SCE. And they're able to use those credits to fund medium heavy duty electrification. So SCE is developing a vehicle incentive program that's going to look similar to HVIP as far as I know. And I believe they're also thinking about an infrastructure incentive component to this. But the general idea is that this creates a pot of funding that can be used to support carrots in the market. That's, again, really compelling when budgets are tight and there's, it's difficult to find funds to stand up these programs. So LCFS can serve as a three-legged stool for medium heavy duty electrification. And then, favorable rate design. I talked about this, really thinking future-proofing sites and really this move towards megawatt charging. And then finally, infrastructure incentives. I would say vehicle incentives are more important given that that seems to be the bottleneck, at least with our business and what we're experiencing. Utility make-ready programs are really helpful. We utilized the SCE make-ready program at both of our sites, or at all three of our sites in LAX and Long Beach. And those programs are going to be sunsetting. And so we're really hoping that there's other programs to fill that gap, especially thinking about behind the meter and in front of the meter incentives. Really, the cost of the charger is dwarfed by the cost of everything else. And so making sure that incentive programs have multiple allowable costs, like they're not only incentivizing the charging station itself, but thinking about the other aspects of it. And then for the clean fuel reward, or actually I'll finish my thought and then answer that question that came in. Finally, with the infrastructure incentives, again, streamlined, flexible program design is really important, and just allowing shared charging to be eligible. Sometimes we're completely boxed out of incentive programs because we don't have 24/7 public access at our sites. And I think there should be allowance for multiple types of businesses and diversity of charging solutions for fleets. And especially in this early stage, we're seeing a lot of demand and need for that guaranteed infrastructure. Because if a fleet is going to make a huge investment in this really expensive asset, they want to know that they're going to be able to charge it. And like I mentioned, we're thinking about batteries, both mobile and on-site. There's other, on-site generation options. Typically, solar hasn't penciled out for us because we're building in locations that are really space constrained, like in ports or in city centers. And so solar doesn't quite make sense. It's kind of like, at least on the West Coast, like an acre for a megawatt of solar, roughly, for a rule of thumb. And so the economics haven't made sense for us yet, but we are buying renewable energy credits through the LCFS program, or renewable energy credits, and our credit brokers helping do that. And really, we're motivated because that helps us earn more LCFS credits. And so if we want to think about zero emission electricity, that's one way to approach it. And I do think, incentives for on-site generation like solar can also be really helpful in pushing for that. And so just allowing flexibility in the program design, kind of allowing charging providers to put together a project proposal and then bringing it to the funding agency and letting the funding agency give it a thumbs up or down can be helpful. And the Energize program in California is a good example of a streamlined program that has worked well. So to answer Mary's question about the Clean Fuel Reward Program, whether it's run by the utilities themselves. So the way I understand it, and again, this is something that's new and still developing with SCE, is that SCE is designing the program. They do have an advisory council made up of other stakeholders, such as some of our competitors are on that council, and they're advising the utility on program design. But ultimately, the utility is designing it how they want. And CARB actually is also dictating how they want that program to look. And so I think from what I understand, it's going to be a conversation mostly between CARB and the utility on what that program design looks like. And then the reason that this light duty funding is going towards medium heavy duty vehicles, I believe it's because this is what CARB directed the utilities to do. Like that's kind of what they're allowed to spend the money on, but you can be creative and put that money towards other objectives. This is just what's happening, at least with SCE, as I understand it. And then go ahead, Matt. I see your hand up.
Yeah. I guess first I just had like a clarification to see if I'm hearing everything correctly, and then a follow-up question from that. But I guess what I'm understanding is that a fleet could, for instance, like, come to Zeem. They don't need to have like a long-term subscription or anything. They can just agree to terms to be able to have access to charging at the site. It doesn't need to be long-term or anything like that. And then that fleet could either decide, yes, we want to leave our vehicles at the Zeem location and they'll be ready with range by when we need it, or the fleet could say, hey, they have 3 Class 8 trucks and they want to load and unload at their own site and keep the vehicle there overnight, but could come to the Zeem site, fast charge in 30 minutes and leave. Like both of those options are all available.
Yeah, you're exactly right. Yeah, and we don't have a minimum contract length. We prefer longer term contracts, but we have in the past offered charging to fleets for a week or less, or even just a day. So it's really open to whatever the fleet needs are and whether we have capacity to support them at our site. That would be a good problem to have, right? If we're so busy, we can't accommodate an additional vehicle. But you're right. Those are both options. So, you can do the full white glove service with Zeem, where we deal with everything, including the vehicle and the charging and office and everything, or you can just come to us for charging at a per kilowatt hour rate. It's an open-ended agreement.
Okay. And from an operational standpoint, I mean, basically you have kind of 2 main types of charging, which is multi-hour dwell or in and out.
Yep, that's
And
true.
then for the multi-hour dwell, I assume you probably think about a minimum amount of parking available for people to come in and pick up the vehicles. Like there's probably got to be a good amount of parking available for drivers
Yes,
to come in
yeah,
and clean
and
their vehicles.
we do think about parking when we are making those contracts with fleets. So that goes into kind of the calculus of whether we can accommodate an additional vehicle at that time, or say a fleet has 100 vehicles and they have certain needs. We determine that. We also sometimes work with off-site parking, so we're able to use adjacent nearby sites to expand our parking capacity, even on a short-term basis. We have a partnership with LAS Parking, which owns a lot of parking locations across the U.S.
Gotcha. And then I know that this is never going to be answered in a couple minutes, but I think one thing that would be interesting to hear probably is from an investment standpoint, like what criteria does Zeem look for? I know you mentioned, for instance, like 3 layers of customer interest, but from another standpoint would, for instance, be like available capacity. And if that's something that you look for, from a real estate standpoint, or if, for instance, you just already have sites, so you don't have to look for capacity, you're looking primarily for customers versus other investment criteria.
Yeah, that's a great question. I would say the investment criteria is more than just the customers. The site economics are really important. So what the cost of power is, the price of the land or the lease price, that goes into the equation. And really it's like a function of like, how much does the power cost? How much does the land cost? How much are we going to be charging customers for charging, and is that a price that is palatable? And the customer demand goes into the consensus, as well as the available capacity at the site. So you're exactly right. We are looking for sites that have capacity available in the short term. We can be flexible and do like a phased interconnection and build a bit of charging out and then increase that capacity. But it's multiple factors.
Thank you so much, Margaret. I really appreciate you joining us today and just providing this very real world perspective on what these sites really look like, how they operate. I think this was incredibly helpful for states. I hope that's true for everyone on the call. Please let us know if you have additional questions as follow-up. Otherwise, like I mentioned, this is being recorded. We'll post it online. I'm also happy to share the slides with anyone who would like them. And I'll just note too, our next call will be in December for this working group. Following Thanksgiving, it's a little off our usual schedule. In the email about that, you should have also received Zeem's comments that they submitted to the C3 partnership. We're going to hear more about that partnership between quite a few states in the Northeast for medium heavy duty charging on that next call in December. But feel free to get a sneak peek and read through Zeem's comments that they were kind enough to share with us. Thank you so much for joining. With that, we'll go ahead and end today. Thanks again to Margaret. Really appreciate you hopping on.
Thank you so much. Yes, I made it through without needing water until the very end.